AI drives another massive market rally in May, but covers up growing inflation fears. The S&P 500 rallied again, adding another 5% in May as AI earnings fuel more hype. However, it masks a changing macro as interest rate expectations take a U-turn. So we started May with a blowout jobs report signaling the labor market remains fairly strong. However, inflation is catching fire from the high energy costs. Both CPI and PPI surged higher, showing price increases are spreading beyond just energy and into the broader economy. Suddenly, the interest rate narrative flipped. Investors had entered the year expecting 2 to 3 rate cuts, but the data now has the market pricing in about a 50% chance of a rate hike instead. However, those concerns got drowned out by AI hype. It's off the normal earnings cycle, but lots of AI buildout names reported in May, including poster child NVIDIA. The demand continues to smash records, fueling earnings across the AI buildout ecosystem. So what now? Well, despite no movement on a US-Iran peace deal, investors still believe the war is over and essentially have moved on. Oil futures were down 17% in May, while gas prices have dipped a little as well. However, they both still remain sharply higher than pre-war. While still waving it off, investors will continue to monitor the inflation situation. The best case scenario is a peace deal was made yesterday and the Strait of Hormuz was reopened immediately. But even then, we see downstream impacts outlasting the headlines markets are waiting for. However, any peace deal seems elusive, and keeping the Strait of Hormuz closed is Iran's best leverage. This has us cautious on inflation in the near to midterm. We're also closely monitoring the AI trade. The innovation possible with AI is undeniable, but we're still not sold on the amount of money being funneled in. For us, the question remains, how long can hyperscalers continue to outspend each other? We don't believe it's forever, but also don't see it ending near term. However, we are getting more cautious though. Hyperscalers have gone through cash on hand, cutting employees, raising debt, and now selling stock to fund it. So far in June, the market rally appears to have leveled off. However, the market catalysts for the rest of the month remain: any resolution to the US-Iran war, any inflation impact from oil and gas prices, and the growing possibility of rate hikes. Stay tuned for more updates throughout the month.